Uh-oh.
Aha.
We live, y'all.
It's another one.
It's another one, Quezzy. We got another episode for the people out there again. Hey, everybody, welcome to the Cat and Quezzy show. I am your man, Cat.
What's good, y'all? This is Quessy, and this is the Cat and Quessy show. And this series is brought to you by, go ahead, Cat.
This series is brought to you by Heal the Hood, where we're coming into our inner city communities, educating, motivating, and inspiring those to live a better, healthier life one day at a time, y'all.
Amen. And this series is also brought to you by Alignment Agency, where wealth and wellness unite. And today's episode is, drum roll, everybody. Drum roll, everybody. Got to get the anticipation up. Is all money good money?
Ooh. Is all money good money? There's lots of ways to make money, y'all. I don't know if they all good though.
Let's find out.
Oh yeah.
Let's find out. Let's see what the people think, right?
Oh yeah. And before we hop into it, I want to go ahead and introduce one of our lovely, amazing guests. We actually have two of them today, and one you've seen many, many times before. She's becoming quite the regular on our show, a very highly requested guest, because every time she comes on, she's bringing some flavor, she's bringing some energy, and she's bringing a fresh perspective. So I would like to introduce once again, Mrs. Ruby Envy, aka Kenya Aissa.
Ooh, welcome back, Kenya.
Thank you. So good to be back.
Fantastic. And also in the blue corner, we have coming at you from the world of credit restoration, Mrs. Monica Thomas. Can you hear us, Monica?
What's up?
Ooh, I need to fix my credit. Come on.
Hey,
let's go.
Yeah, you and a few people tapped in. So that being said, I'm going to go ahead and give a super quick bio for Mrs. Monica. So I have known her for quite some time now. You all are introducing her or meeting her for the very first time, but I promise you it will not be the last. So this is Monica Thomas. She actually comes from the background of the beauty industry, in case you couldn't already tell. She's been doing hair for 16 years. And prior to the pandemic, she was actually making some pretty good money, right? But by the grace of God, she came across the world of credit restoration, and she hasn't turned back since. So her passion comes from a love to help others get out of bad financial positions, and she wants to help them find their purpose and change their life. Wow.
Come on. There we go.
We should call it Jesus. That's what it sounds like.
Yeah.
That's what's up. So, Brother Quezzy, you are famous for every episode to get a video going to get these conversations. I would love to see what video you have for us today.
Oh, absolutely.
Especially on this topic.
You
got Trump on here somewhere?
Oh, no, not on this one. Not on this
We are not allowed to say that word, y'all.
I'm just saying.
I'm still traumatized.
I'm trying to figure out who Quezzy is going to bring up right now.
No, he who not be named. So this, at least in regards to the hip hop and rap community, this might be a version of somebody who should not be named. But personally, I would consider myself a fan, one of the newer generation. But he has a really good discussion on another podcast, and I pulled a clip from it that I'm going to share with y'all today. So here's what we're going to do. I'm just going to share my screen really quick, make sure everybody can see this. And I just love technology. So if you're watching this on the rebroadcast, then you'll be able to listen. But can everybody see my screen? Yes.
Yeah, I'm pulling it up.
Fantastic.
Oh.
So I'm going to get this going.
Only one that can't hear it?
We need some volume, Quessy.
Oh.
There you go.
I need some more volume too. Can anybody hear? Yeah, we can't hear it, Quessy.
See, this is the beauty of doing things live.
Uh-huh.
Wow.
It's okay.
I'm wondering, Wow. So I can hear it perfectly. I don't
Oh.
know why you all can hear it. Well, let's try this. Let's pivot. So I have another video that's a little bit. This one is actually IGTV.
We're
So
gonna do that crossover.
yeah, it's just one of those things. So let's try this. I'll share this screen and let me know if y'all. So y'all can hear anything.
Zero. Wonk, wonk, wonk.
Okay.
Womp, womp.
Oh, you know what? You know what?
That one we couldn't hear.
No, I know why.
Even Heidi said can't hear it.
Yeah, I know exactly why you couldn't hear it. Doggone it.
Come on, Heidi.
That's how you know between two generations. This is how you know. But I figured out what the problem is. Let's try this.
Good.
Let's see.
3, 2, 1.
Credit is more important than having money.
Yes, it is.
Every nigga around me, all my niggas who live with me, they'll tell you, I made sure I helped all my niggas. Like credit, banking, bank accounts, all that shit is important.
Yes,
Because no one really teaches it to us.
Nobody.
No one taught me. Had I had learned it, I'm still good. I've been a lot better. You know what I'm saying? But I had no one to teach me financial literacy.
And then you come
literacy.
and then you get a big bag of money
at 18.
And it's like, okay,
let's
go buy jewelry
and let's go get some chains and a penthouse and mama get the roller and you know what I'm saying. But had I had financial literacy is so important. I think labels, when they sign new artists, they should put their artists in financial literacy classes. That would be amazing, because then you not only are you setting your artists up to make money, credit is more important than having money.
Okay.
Ooh, credit is more important than having money.
Yes.
We're gonna end it on that.
I'd say, yeah, let's end it. So that's just a clip, right? They have a full interview that's about an hour long.
And that artist was, for those that don't know him, can you?
Yes, that's Lil Yachty. That's
Lil Yachty. We just took credit advice from Lil Yachty. Was he on a Sprite commercial?
He's on a lot of commercials, actually.
Yeah, he's on a lot of commercials.
Yeah. He's very, very good with the marketing. Extremely good with the marketing. But as you can see, he talks about a lack of financial literacy. And that's kind of how I want to start off this conversation, right? Because a lot of people think that having money is going to make them rich, or having money is going to make them well, right? When in reality, if you don't have financial literacy, then you'll be in a worse position. That's what he was talking about in the video. You're going to be in a worse position than before you had money if you don't know how money works, right? So
that's right. And how credit works and how important it is.
Bam, that's it. Yeah. So, Ruby, go ahead and start us off. I mean, like, from that video, what were some of your immediate takeaways?
Oh, so I can relate so hard to that, except for the getting a bag of money part. But I talk to my god kids about this all the time. I know they are sick and tired of hearing me talk about making sure you have good credit, making sure you build your credit, making sure you make smart choices with money. I know that they are tired of that. However, and my son is only 11, we haven't started having that conversation yet, but I keep getting information that is age appropriate for him so that we can start having these conversations. Because just like that gentleman said in the video, I was not taught financial literacy. I was told by my mom, learn how to balance a checkbook, but that was the end of the road.
They don't even teach you that in school.
Right. Yeah. And so that was the end of the road. And so then I get to college at the age of 16 in Atlanta, Georgia. Okay. I get to college, and because you're in college, people start coming at you every time you're in the mall. They're like, do you want a Macy's card? Do you want a this? Do you want a that? And I'm like, free money. Okay. So I let a $30 dress at Macy's ruin my credit, because every time the bill came, I'm like, I don't need to pay that.
You made it
Look
disappear.
at my free dress. Yeah. Oh, I made it disappear. And I did the same thing with my student loan for years. Every time I got something in the mail, threw it in the garbage. I'm like, what they gonna do? They can't find me, right? But they do. It will always find you. You will destroy your credit and you will mess yourself up for years. And so I teach my people from my young people. I have 9 godchildren and 1 son and some nieces and nephews. I always tell them, don't do what I did. Do as I say, not as I do, because training is important. We have to start the training young, you guys.
Wow.
Just like you just said a second ago, with the student loans, how many people have student loans for 20, 30, 40, like their whole life, right? They have these student loans that they can never pay off. That, you know, it's so tempting as a young college student to take this money because I don't have anything.
I have one. I have a student loan. I don't need more, thank God, but I certainly did.
Yeah. I have a whole bunch of friends and family members that got these student loans and they're still paying off to this day. And they're not allowed to get certain things like, you know, you can't make certain purchases because, you know, back payments on student loans and different things like that.
Absolutely.
Yeah.
So,
yeah. And I like to ask our honored guest, right? Ruby, you touched on something really, really amazing when you talked about credit, when you talked about it being essentially a history of all your purchases and even the unpaid ones, right? And I want to ask Monica, so when we were on the phone, we were having a conversation about this episode. I asked if you were into credit repair, and you said, no, I'm more into credit restoration. And I'd like to clarify for myself as well as our audience, what is the difference?
Yeah, so when we all think of credit, right, we think of like, okay, do you have good credit or do you have bad credit, right? And a lot of people, even myself, before I got into credit restoration, I thought of like repair, right? Like you're just putting a patch on something. So when I think of repair, I think of a patch, right? Is a patch really going to really bring it back to its fullness, right? Or is it just going to patch it up? And so when I heard of credit restoration and, you know, actually learning the financial literacy that comes with credit restoration, it comes with learning how, like, where does credit come from, right? The differences between revolving accounts and installment accounts, right? So these are like 2 different things, you know. Are you not only working on getting negative items removed, are you building your credit? You know, so these kind of like go hand in hand. So restoration to me is like learning all the aspects of how credit works, right? The ins and the outs, the nitty, the gritties, right? So to me, credit restoration is more of like learning the financial foundation to everything. Your budgeting, right? What comes in, what goes out. Because you guys could probably agree, and I'm with Ruby. Like when I got my credit card, I was like $1,000. I'm about to swipe everywhere, you know? And I was like, but wait, I got to pay that back. But it starts with, you know, the first thing is budgeting. And so when I look at budgeting, it brings us back to financial literacy. Like, you know, how much money are we tracking in between you and your spouse or just yourself? How much money is going out? So to go back to your question, or to go back to breaking it all down, repair to me would be something like, you know, a lot of people go to these companies where they do credit sweeps, where they're literally swiping out all your credit, good and bad. That's like a patch, because some of that stuff is going to come back on, right? So if you don't
temporary.
Yes, temporary. Also too, and I don't want to take up too much, like, you know, but also too, because I could just go on and go on and go on and get all excited about credit, but also too, a lot of people will ask, well, do you do trade lines? And people go and spend a couple thousand on trade lines, $20,000, $40,000 trade lines for only 2 months. That's a patch. That's not a real organic account. So that's what I would say the difference is between, like, you know, repair and restoration.
And Monica, can we say for the people, especially because I know some of my young people are watching right now, what is a trade line?
Sure. So a trade line is basically any type of open account. So a trade line could be a credit card. A trade line can be an installment loan, for example, like a car note. So when you go into a car dealership and they give you that monthly payment, that would be considered an installment loan, meaning trade line. So there's various trade lines, as I mentioned, like installment trade lines and revolving trade lines. That would be considered like any type of open account that is in your name under your social.
Wow.
Thank you for that.
Yeah. Great question. And I want to ask you, Monica, like, what got you into this line of work?
Yeah. So, as you kind of mentioned, right, I come from the hair industry. So, you know, I was obviously in financial literacy for 2 years as I was running a, 5-chair salon. But I went through a divorce and my credit went from a 730 to a 492. And, life happens to us, right? I was making good money, had my own salon, was a homeowner, had, life was cool until my divorce happened. And as I was going through court cases, late, payments weren't being made, mortgages weren't being paid. So life happened to me. So not only did I have a 492 credit score at the end of my divorce, but here comes this pandemic. Pandemic came and my 15 grand a month went to zero. So my income stopped. So I was like, well, shoot, I can't even go apply for a loan because I have bad credit. And then 2, I was like, okay, I need to make some type of income. Let me learn about credit so I can possibly offer this to so many people that are going through the same situation I'm going through. And at the end of the day, I feel like God, literally landed this opportunity in my lap, and I'm so grateful for it.
Amen. Amen.
That's how I actually got into this.
Yeah.
But think about so many people in our community that are young that, like we just said, get their first credit card and just screw it all off, right? And then have to go through all these processes to rebuild the credit. What would you say would be like the first thing if I'm, fresh 18, 19-year-old, clean credit? What's something that I can do to build my credit so when I'm looking to get that first car, first house, that it's something like really secure that they look for on a credit score?
Yeah, that's a good question. So I always like to start with, if you're a parent and you have children, I'll start there. If you're not a parent, then I'll talk about that after. But if you're a parent and you have a child and you have good credit, you actually can add that child's social security number onto a positive credit card, okay? Making them an authorized user. So you could do this at any age. 4 years old, 6 years old, whatever the age is, as long as you got good credit. By the time they're 18, they have established that history. They've also established that positive score, okay, because history actually is counted in your score calculations. So if you're a parent, add on your children at a young age, as long as you have good credit, on-time payments, and then all of that credit will be on their credit when they turn 18. So they're already going to have excellent credit.
So in your situation, so say if you had your kids on your credit and then life happens and it went down to a 492, does that affect them as well?
Yep, absolutely. If they're added to any of those trade lines, absolutely. So that's why I always say for us, we want to make sure we instill the knowledge and the education before they were to do this, right? And for someone that doesn't have any kids, right? What I would suggest is that if there's someone that turned 18 and they're like, how do I build my credit? Because, a lot of people will not approve people even with no credit. So no credit could just be calculated as bad credit. So there's an app called Self, SELF.
Y'all better be writing this down.
Yeah,
absolutely.
So there's an app called Self. And what's cool about this app is that you can actually choose how much money you want to save into this app. Okay, so basically it's a bank account. And so I personally have one myself. So I'm putting $30 every single month into this app called Self. And they charge me $7 a month. So that $30 that goes into this little bank account, right? That $30 every single month is adding a positive trade line onto my credit. Called an installment loan. And they're taking their fee, which is the $7. That remainder, that $23, every single month is rolling from month to month to month. So in 12 months, they're actually going to give me back a Visa card. And that Visa card is actually going to be that money that I saved and not only built a whole year history of a free trade line or of a trade line. So it's a savings vehicle. You now just got a positive history on your account. And of course, they're going to charge for whatever they're charging for, but it's a positive trade line.
Absolutely.
And it's affordable. Self.
Absolutely.
If y'all wasn't tuned in
I just downloaded
it.
I just downloaded it already. Okay. Thank you.
Yeah. Directing the media.
We got, hold on. Oh, I was about to say.
Self. Deborah, it's called SELF, SELF.
Yeah. And this is really good. This is really good.
So if you found that to be very valuable, y'all, and it's only going to get better as we go, hit that share button right now so we can get this message out to more people in our community as we go. Also hit that like button and keep the comments coming so we can get the conversation rolling, not only between ourselves, but with you guys as well in our chat that's going right now.
Absolutely. And this is an organic conversation, so it's meant to just flow freely. And I love the direction that it's going in, because we haven't had a credit restoration specialist on our show. Like, we've had topics and conversations about money, but we have an actual expert here in a field that we haven't discussed yet. So I really want to take advantage of this opportunity. I'm asking everybody, if you're watching this live, right, in the rebroadcast, you missed out. But if you're watching this live, I need you to comment with any questions that you have related to credit, right? Any question related to credit, related to debt. And speaking of which, I want to drop some stats on y'all really quick. We're going to take a quick aside and drop some stats. Hopefully this will get the wheels turning for your questions, all right? So we're going to look at some of the different types of debt that every American household has, right? That averages, right? And what's owed. So check this out. Across America, the average U.S. household, any type of debt, totals about $145,000, right? So that means
that hurt me.
Okay. We on the same page. I feel it. I feel it.
Man, that was a gut shot that you just gave the audience.
Oh yeah, let's talk about it. So any type of debt, the total average American household has about $145,000 of debt. Okay, probably accumulating interest. The total owed in the U.S. is over $14 trillion. Right now, let's look at credit cards. This one is very important. Credit cards revolving. Right. The total owed by an average American household is only about $7,000. I feel like that looks a little bit low, right? But when we look at the total owed in the US, it's over $416 billion. Over $416 billion of credit card debt owed total in the United States, okay? Mm-hmm. It gets better, because next we look at student loans. And I'm gonna end with this one because, man, we're probably talking to a lot of millennials right now, right? Talking to a lot of millennials, a lot of Generation Xers, right? We know all about student loan debt. The total average student loan debt amount owed by an American household is $56,000, okay? Let's rewind, because credit cards is $7,000, the total average amount that's owed. Student loans is $56,000, total average amount for each American household. That brings the total owed in the U.S. of student loan debt to $1.5 trillion. Okay, credit cards is $416 billion. Student loans is $1.5 trillion and counting. So, something important to consider. And I would like to get back to our special guest, Miss Monica. So what impact, and this is good for everybody. I love what Ruby said as well about her own crisis with student loan debt, right? Or just any form of debt. But a lot of us are experiencing this. And I want to ask you, what impact do student loans have on your credit?
Yeah, so student loans, and it's crazy you mention that, like with the trillion, because so many people that we have actually helped as clients, the student loans amounts were large compared to little collections.
Yeah,
and so it's crazy. Yeah, it's powerful. So, I mean, just in student loans, I mean, that in itself, say you have two children, right? And you want to put these two children in college, and, you got two parents, hopefully two parents, but mostly all the time there's one parent. I shouldn't even say it like that. Sorry. But my point is like, whether you have one child, two children, whatever the case is in the household, you times that student loan times however many children you have, and you don't have enough income coming in revolving, you're already over exceeding, your financial state. So you add on these interests as well, right? And they may prolong the loan, they may give you longer extensions, but guess what? That interest is still compounding. So it's like, how are you going to catch up? And you hear a lot of these type of cases with nurses and doctors because they're in school for 8 to 10 years. And these aren't cheap schools they're going to.
Just
so
racking up debt.
You know? And so that's why I think too, like, you know, just going back to the community, like it's so important that we talk to our community about different loans, different options, and applying for grants instead of loans, you know, because then who's winning? The financial institutions. Who's suffering? The families.
And people have to understand the grants you don't have to pay back. It's just something that you qualify for by meeting a certain criteria when you're in college, right? So
exactly.
yeah.
Exactly.
I had a grant too, and part of the problem is that the grant doesn't take care of enough. And then you have students living off of their student loans, paying their bills off of their student loans, and not just, because I've known lots of people like that, not just paying for their tuition or their books or their housing, maybe it's on campus housing or off campus housing, but also paying for, I mean, sometimes they're using it to put food in their fridge or to party, you know, or whatever. And so there's just not enough. So what can these young college students do so that they don't get caught in that trap that's going to last them, like Kat said, 20 or 30 years, you know?
Yeah. And I'd like to answer that, and then I'll defer to our guest as well.
Yeah.
But I want to speak to the parents, right? And if you're not a parent, you plan to be a parent, right? More than likely, or you're going to be a parent. The best thing you can do is start saving now. Right. The best thing that you can do is start saving now for your kids to go to college, because one of the worst feelings in the world is being a parent and saying, hey, you go to school, you get good grades, you get into a good school. And then your son or your daughter says, I lived up to my end of the deal. Are you going to help me out with this? And not being able to help them out and literally feeding them to the wolves, AKA these student loan companies that don't give a damn about your child. Right. So
Bria had, go ahead.
No, go ahead.
No, I was going to say, Bria has a great question. She says, are there any good credit cards for kids, for parents to build their kids' credit?
Yeah, so they're actually, you can actually, once again, add them on as authorized users if they're children. So you could even do a secure credit card, which is, you can even, secure credit cards can range from like $200 to $2,000. So if you don't want to like get a huge credit card and get tempted to spend it, I would suggest more or less get like a $200 secure credit card.
And you can do that at credit unions as well, right?
Yeah. So there's credit unions, First Progress is another one. They have a low interest rate of 9.99%. A lot of other secure credit cards average about 15 to 23%. So to be honest, though, I would just more or less add them on to that self as an authorized user, because you're saving for them. It's more of a savings vehicle. So,
Right.
Yeah. And so I believe Bria was asking if there are any specific credit cards you recommend, right? Like they have Discover cards, they have American Express, they have the Chase Sapphire cards. Are there any specific ones you recommend?
Yeah, say somebody's like fresh 18-year-old, just had a birthday and they want to start building their credit. Is there a particular credit card that you would recommend to start building that credit?
Sure. Yeah. So actually, when someone's 18 and they go into a bank, they actually can apply right there in the bank, right? If they have no credit. So like Wells Fargo, Chase, I would always look for, and this is just, rule of thumb, you always want to look for a credit card that has a low interest rate, the lowest interest rate. So when you walk into a bank, you can say, hey, what's the credit card that you would refer me to that has the lowest interest rate? That would be the first thing. And then the second thing I would ask is, what credit cards right now do you have that give cash back rewards? Cash back rewards. Because this is how a lot of people are leveraging credit. This is a whole nother caliber of credit. But people leverage credit cards to pay for their mortgages and pay for their bills. Meaning you pay back that credit card, you get all these points back, and you get cash back, and you get credit card rewards, Amazon, Safeway. So you pay that credit card back on time, right? So you swipe for everything you need on your credit card.
Pay it off.
At the end of the month, pay everything off, right? But then you get those reward points. So you get those reward points and you go spend that on your utility bills, on groceries. That's free money. You're leveraging good credit. You're leveraging your stream of income, right? To pay off that to get rewarded for. But there's a catch. Yes, there's a catch to that too, though. The catch to it is most people don't know the credit game. So what they're going to do is swipe that credit card. They're only going to pay the minimum, right? Which is building all that interest. So that money that those people are paying to interest are covering other people's groceries.
Wow. Okay. And I can see we got the questions coming in now. We got it's becoming a Q&A real quick. And I'm just so y'all better be taking notes, by the way. If you watch this is free game.
Rewatching.
This is free game.
Make sure you share.
Or rewatching the rebroadcast, make sure you share. But if you're watching this live, you better be taking some notes because this is the real deal. So let's rewind. I saw another question. It said, how do you stop the bleeding of student loan debt? And I feel like that's super important. So Ruby, if you'd also like to answer this, because I know that you have paid off a student loan, right? What tactic did you use in order to pay off that loan and not take it to the grave?
Well, after years of throwing the mail in the garbage and then finding that was not a viable option as far as them not chasing me down like a pack of wild dogs. I finally, after I got married, my husband and I started to, and I really should, I'm just going to give him the credit, you guys, because I was like, I don't care. Like, what are they going to do or whatever? And he was like, no, that is not how this works. And, and he was like, so we finally started working with them and had a payment plan going. So we had a payment plan. And then as we were working and stuff unfortunately, I went to college a long time ago. And so I know young people that have 30, 40, 50, $100,000 student loans. Mine was not that bad. And so we were able to finally just, pay it off. And it, it took time, but we finally just did it. And so, and I got help. We got family help and stuff like that, which a lot of people just do not have, and so it took some time, but, we just kept chipping away at it and now it's gone. It's been gone for 17 years or something. So I've been really lucky. Yeah. But you have to not ignore the problem. Ignoring a problem has never worked as far as making it disappear, because I was really, really, really immature about money. And that's one of the reasons why I tell people from my own experience, don't do that. That's crazy. And that's why we have to teach the kids, you can't do that because you can really mess yourself up. And I was really lucky in that, just chipping away. And it wasn't like the $100,000 loans that you see these young people having now.
Yeah, mortgages. Yeah, that's the real deal. And I appreciate that response. And I want to dig in a little deeper, right, for the people who might be dealing with that $50,000, $100,000 student loan debt, right? When you mentioned chipping away, was it like a commitment you made? I'm going to take $200 from each check, or was it just any disposable income you had? You said you got help from family. Like, what did that mean?
It was coming out. So we set it up for it to come out automatically. Until it got to the point where there was a small little amount left that we could just pay off.
Perfect.
Yeah.
Okay.
So, but it was coming out automatically out of our bank account monthly.
Okay. Outstanding. Yeah. I want to ask you the same thing, Ma, before we move on to the other question. I want to ask you the same thing. Like, how do you stop the bleeding of student loan debt, right? If you're able to advise on that.
Yeah. So, honestly, if it's people ask us this question all the time, but if it's an open account, you really, can either negotiate it with the creditor, and say like, hey, I'm going through whatever I'm going through, or this pandemic, has put me in a place where I can't pay. Then you can, negotiate with them. And I do know too that like there were a couple things that passed through Congress right now where they're relieving the loans for school. So I don't know all the details. Yeah. So I don't know all the nitty gritty details to it though. So I don't really want to blast it out there, but I do know that they're forgiving a lot of them. Student loan side. Yeah. So if you guys can Google, like, you know, what's the latest with student loans and the forgiveness, I would definitely Google that.
Yeah. I got another question for you, but Kat, do you have any questions before I ask mine?
No, let's finish running this question out and then
wait,
I
Kwesi, I have a really small question, really short question. When Monica said for the credit cards, this is going back a little ways, low interest rate. Tell the people who have no idea what would qualify as low. Because you'll have some of these young people going in and somebody will be like, it's 12%. And they'll be like, that sounds low to me. You know. So
yeah. So what interest rates basically mean for people that have no idea, that's okay. Interest rates are basically a percentage of the total. Okay. So say, for example, you go get a loan for $50,000, right? And your interest rate average maybe could be 10%. So, 10% of 50,000 is what? 500, right? No, 5,000, excuse me. 5,000.
Yeah.
5,000. So that interest rate is going to be calculated every single month. Okay. So student loans, if you have a student loan for 4 years, 6 years, then that's where they ask, okay, do you want a 72-month type of loan? Would you like a 50, whatever the case is on the months, that means you're going to be getting a percentage charged to you on the amount of the loan. Okay. So if you guys get your calculator and whatever that percentage is, you times it from the total amount of the loan, and that gives you your interest rate. Did that make sense?
Yeah, that makes
perfect sense.
That makes a lot of sense. Okay. So I want to wrap up or at least consolidate this student loan portion. So if you have student loan specific questions, viewers, student loan specific questions, put it in the chat right now, because after this, we're moving on to the next topic. So my next question for you, and this is a good one because I can speak to this as well, but some people have public loans and some people have private loans, right? I know you're not a student loan specialist, but are you able to discuss which is which, right? Are the differences between the two? And if you had to prioritize, which one you would pay off first? Is that a fair question?
Yes. So I don't really know much, like.
Uh-oh. You muted out, sis.
You guys see me okay?
Okay.
Yep, you're back.
Are you guys see me okay? Sorry, someone keeps calling me on Messenger.
Tell them to go away.
Right.
You're live.
Go away. So anyways, I don't really know the differences on private and public, so I can't really answer any of those questions. So I don't know the difference.
Okay. Oh,
or
guys.
Really speak on the difference.
Yeah, I can touch on that, right? And this is really important.
Please let me know, because this is good for me too.
I got you, right? Is all money good money, right? Going back to the topic of the show. So I was somebody coming out of high school. I was actually the valedictorian in my high school, right? I got really, really good grades, but because of, I believe, the area I lived in and just a lack of exposure, I didn't have any scholarship offers, right? I had one to Long Beach State, but they declined my application, whatever. So I didn't have a lot of scholarship opportunities, right? So I ended up getting accepted to UC Santa Barbara, which is an amazing campus, but it's a UC. It's really expensive, right? I really wanted to go there. I really wanted to get out of the house. My mom said you should go to the community college, save some money. I said I need to get the hell up out of here, right? So I didn't have any opportunities. I didn't have people in my family who were going to fund that for me. So I ended up taking out student loans, right? And the college was so expensive. And my parents' FAFSA was like, so pretty much my parents made too much money for me to get a lot of grants through the student loan program or through the federal government, right? So I ended up having to take out private and public loans, right? So just to differentiate, public loans are the ones that are offered by the federal government, right? So those are public loans, and they're, I believe, unsubsidized. Oh, doggone it. Y'all gonna back me to a corner. So I know there's subsidized and unsubsidized, but long story short, public loans are offered by the government. Private loans are offered by companies, right? So private loans can be a lot stickier, right, than public loans, because I believe public loans are the ones that can be forgiven. but private loans cannot be forgiven. And if they are, they're more so negotiated through the company and not through the federal government. So that's really important to differentiate. And I know that at least when I was told by my advisor, prioritize paying off the private loans, right? Because like I said, those public loans can be forgiven, but the private loans, that's with the company. And unless you want to be owned by that company for the rest of your life, then you should probably pay that one off a lot quicker, which I did, and I'm very grateful for. Does that make sense?
Yeah, that was good.
It sounds like Bria concurs in the chat. It sounds like Bria is saying exactly the same thing.
Outstanding. So subsidize a government, unsubsidize a private. That's outstanding. Thank you so much, Bria. Thank you. So with that being said, if there's nothing else student loan related, I saw another question that was really, really good, going back to Heidi's question a few minutes ago. So Kat, if you could bring that up really quick about the debt relief. I know this is a hot topic.
You said Heidi?
Yes, Heidi. So she asked this question. There we go. And before we get to our guests, I want to ask Ruby. So Ruby, have you had an experience with debt relief? Have you referred anybody to a debt relief program? Is that something you could speak to at all?
I have never. I've never had that or anything. Fortunately, all of mine have been small and also a really long time ago. Yeah. So fortunately for the, I had a lot of luck in that department, and thank God.
Thank God. Average American household debt is $145,000. So you're on the good side of that spectrum. Right. So, and Monica, is that a fair question to ask? I know you do credit restoration, right? But in terms of like debt relief and Heidi's specific question, right? Do you have any tips for people that have gone through companies like National Debt Relief once all the cases are closed and they're ready to build their credit again? So is that something you can speak to?
Absolutely. So this is a question we get a lot because once again, people who owe debt, obviously are trying to figure out ways to get rid of it. So I'll first tap on like the difference between the two. Okay. So debt consolidation is basically a company gathering all the debt, putting it in one lump sum payment, and then the client pays back that payment with a percentage added to it for their cost, right? For their services. Okay. In the meantime of someone going into debt consolidation, what I've seen just from friends, the debt consolidation, in order for them to start working on your case, you need to default on all your open account, all your accounts. You need to default, meaning not make any payment. So what is that going to do to your credit? It's going to drop your score tremendously. So as people, they're just like, man, I'm just trying to figure out how to pay off all this debt. Well, the risk to a debt consolidation company or debt relief company is your actual credit score is going to tank tremendously. I've come across people who had 700 credit scores, got into a debt consolidation company and went to the 400s because they missed, 3-4 payments times however many accounts they had. Okay. So speaking to the question, once they're in this program and they have all that negative history, that's where someone like a credit restoration comes in, right? And starts removing that negative history, allowing that credit score to start jumping up again. So think of it like a balloon, right? This is just food for thought for the viewers too. One negative item on your credit, one late payment, one collection, anything negative can drop your score up to 130 points. So you can imagine a debt consolidation company, they're lump summing everything together, and then credit restoration comes in and helps clean up, remove the negative history because now they're closed accounts. Okay, so that's.
Do you also deal with a lot of people that file bankruptcy as well?
Yes. So that's another thing with bankruptcy. That's another, question that people ask. So there's two types of bankruptcies. There's a Chapter 7 and there's a Chapter 13. Chapter 7 bankruptcy is basically you're agreeing, right, that you're not going to pay back a penny to any of this debt. The bankruptcy puts all your debt into this case, Chapter 7, and wipes all the debt away, meaning you don't pay it back. Okay. A Chapter 7 will remain on your credit score, your credit profile for 13 years. 13 years. And now what we do is we also educate our clients that even though you have a Chapter 7, you can still purchase a home after 2 years. Okay, so even though you have a bankruptcy, your score is actually going to shoot back up to the 700s because all that debt was piled into this bankruptcy and is basically not going to be showing on your credit profile. That's the idea of it all. But some accounts still remain negative history, right, from that bankruptcy, and that's where we help them remove that negative history.
Wow.
That's a Chapter 7.
Wow.
Yeah. And then Chapter 13 is basically you agreeing to pay back some of this debt. And you're
so
paying
a percentage of it?
A percentage of it. Now, what I will say, and a lot of people don't know this too. We can help remove the negative bankruptcies from the credit reports, but it's still going to be a public record because it's a government action. You're going to court now for this bankruptcy. So it's stamped in public record. Meaning if you try to go apply for a house, you have to be honest. It may not show on your credit because it was removed, but you got to be honest with these mortgage institutions that you have had a bankruptcy because they're going to be able to pull your public record and see.
Yeah.
But you still can get a house after 2 years. That's a blessing.
Yeah. And this is huge, right? And I want to touch on this because as most of you all know, I also work in finance. So not so much the credit restoration, more so the wealth building and financial education, right? But on my side of the game, there's actually a woman who was denied entry into our firm, right, as a licensed agent with our firm because she had filed for bankruptcy, right? So obviously what we do is very serious, but I had no idea that things, and this happened years ago, right? But because that was on her public record, as Monica just mentioned, she wasn't able to work with our firm, right? Even though she was more than qualified, she had no record like criminally, right? But when it comes to doing things that are going to elevate us in life, we got to keep in mind that the decisions that we're making right now can come back to haunt us many, many years later, right? So I'm really grateful for Monica being here. And I pray that you all are taking notes and sharing this with other people. Because think of everybody you know that hasn't told you this information. They probably don't know either, right? So it's now your responsibility to share this with other people and just make sure we lift as we climb, right? Super simple. So I want to share something, but I don't want to stop the vibration. I want to make sure that everybody has had a chance to ask their questions in the chat and have their questions answered. I'm scrolling back. So Heidi, you could let us know if that answered the question that you asked about rebuilding your credit after those accounts have closed, because I know a lot of people are in that. I mean, $145,000 is the average amount that an American has in their household. The average amount of debt, $145,000. That's a freaking grip. $54,000 in student loan debt. That's a freaking grip of money, right? So a lot of people in this situation, don't be ashamed. We can't heal what we don't reveal, but we do have to pivot and head in a positive direction, right? So that being said, go ahead, Monica.
Yeah. So another solution is instead of just throwing in the flag, going to go get a bankruptcy or filing for a bankruptcy, I would say definitely circle back. And, I can give any free consultations if anybody was to need it. But besides me though, there's other options out there other than bankruptcy. I'll just throw that out there. There's other options.
Okay. All right, she's just going to throw that out there.
Yeah.
I'm just going to shoot my shot.
Right.
This is so good. I had no idea that the conversation would go in this direction, but that's what I love about the Kat and Kwesi show. We have amazing guests like Ruby and Monica. What's up, Kat?
We got 10 minutes left in the show. You said we had two videos.
I know.
I'm curious what this next video is going to be about. If we could touch on that a little bit.
Doggone it. So I really want to show the video. It's literally 2 minutes long, and I can already tell that's going to take us down a whole nother freaking rabbit hole. So I'm like, should I save it for another episode, right?
Because we might have to bring Monica back for episode 2.
We might like part 2 and Ruby as well, right? I want to make sure everybody leaves with something tangible, right? Other than you can reach out to Monica. Monica will get your information at the end. You've been freaking fantastic. But I want to give everybody something tangible that you can walk away with. Right? Is that okay, Kat, instead of the video?
Yeah.
Okay.
We'll save it for next time.
Now, Ruby, I want to make sure that you've had a chance to express yourself. All heart and minds are clear. You still rocking with us?
Absolutely. And I love this particular show because I learned a lot but I also learned a lot that I can share with my young people, because I am, somebody who's really kind of been learning for the past couple of years about, trying to make sure that I bring my kid up in a way that's responsible, right? That's not afraid of talking about money. And I think when I was young, I was kind of scared to talk about money. I was kind of scared to know about money. And I think that's really when you're ripping up your bills and throwing them in the garbage and pretending they don't exist, there's some fear behind that. Right? Like, what is the fear? Is the fear, is it a fear of responsibility? Is it a fear that you're going to go down this hole and never be able to come back? Is it a fear that you won't be able to be consistent with the payments? And, so there's a lot
it's a fear
of
being part of this system.
Yeah. And that's a reasonable fear. That is a reasonable fear, because the system is not out to support you. The system is out to get what it can get. And it doesn't really care where you land or if you land. And so what I find to be really important as a mom and as a godmother and stuff like that, as an auntie, is making sure the kids and the young people, don't get caught in the system in a way that they can't recover from, right? And then B, if they're in a situation where they have found themselves with bad credit or they've made bad decisions, to not give up, right? To seek help, to go to somebody like Monica, go to get that together, go to somebody like Kwesi, do what you need to do, face the problem head on, right? Because it gets worse if you don't face it. So important. And I can speak on that, y'all. Let me tell you, I can speak on that. And I know from hard knocks to just face it and get the help that you need to get so that you can get yourself out of it as soon as possible.
Wow.
Yeah, and I think a lot of it you have to think about, especially in our community where, I've worked in marketing and sales and seeing people's credit and, people using their kids' credit to get certain things at certain points in time and ruining their credit at a very young age. But it takes them out of the game of life, right? When it's the time where the market crashes and real estate is real cheap and you want to get in the game and get your own house and do other things, you're not able to play that game because of these issues that we're talking about right now, and not, like Ruby said, not facing it, just kind of running from it and never getting in position, to make a move, to make a change. And I think that's why this conversation is so important in our community, because if we're going to make changes in our community, if we're going to buy back the block, if we're going to buy businesses within the community, we have to have the credit to have that leverage to do these things. And a lot of times that's what's separating us from so many other communities, is not having the leverage to make these moves. And other people do have the leverage that come into the community and reap the benefits of all the money that we spend, right? Because I think the last time I looked it up, I think our community spends like 1.3 trillion, right?
Yeah.
1.3 trillion.
Yeah.
How many of us actually see that going back into our own community because we own the businesses within our community, because we own the real estate? Not so much, right? Because of the bad credit and the bad decisions and the lack of education. And this is what we want to share in the community. And this is why these conversations are so important to have, because it's not happening enough. It's happening more. I'm seeing more and more of these conversations popping up on social media, but we need to have it all the time amongst each other, right? Sharing these conversations.
All the time.
Because there's a lot of tricks and tips that, because we didn't grow up in that environment and learn these tricks and tips that are within the community, it's just a lack of education of what resources we can access once we get to a certain point in our life, right? Just like Monica said earlier, my parents did that at a very young age, was put me on their credit cards to get me actually good credit and stuff like that. But me being a young kid, first thing when I found out I had great credit, I went and bought a car, right? I was like, oh, let me go get a car. And I paid the car off, but it was one of those things where it was like, okay, I could have definitely screwed my credit off really quick if I stopped payments or whatever the case may be. And then where would I have been then? Right? Trying to fix it and go back and do all these things instead of being proactive, being reactive, right? And we want to teach the community how to be more proactive when it comes to their health, their wealth, and everything else.
I want to say, piggybacking on what you said, Kat, real quick, is that at least when you bought a car, you bought something that was useful.
No, it was a brand new Cadillac. It wasn't useful.
Okay, well at least it was a car.
It was a brand new Cadillac. It was a brand new CTS.
Right, I hear what you're saying, but at least it had a purpose.
It was shiny
had
and
a
nice.
purpose, right? It had a purpose. It could get you around, right? But what I am saying, because I see a lot of this in our community, is you will have a whole suit on that's got GGs all over. You got a whole Gucci suit on, a Gucci hat, Gucci socks, and Gucci shoes. Okay. And you are like behind in your rent, but you can't put food on the table, not paying your credit cards and stuff like that. And looking rich is not the same thing as being rich.
Right.
Yeah.
Right.
Oh,
looking like a baller is not the same thing as being a baller. So get your money right first. Yes. And wear the cheap clothes or the shop at Walmart or whatever you need to do to get your money right first, and then treat yourself on those things if you need to. But think about if the money is working for you or if you are working for the money.
Yeah, and that's
make your money work for you.
So many freaking nuggets, right? And my mentor tells me all the time, oh yeah, they better be catching it. We got like
you got a basket. I gotta carry all these jewels that you guys just threw.
This is a classic episode. I can feel it, right? And something my mentor tells me all the time is life is a game of inches, right? Life is a game of inches. And what that means is you can go out to eat or you can just go home and eat what's in the fridge, right? That's an inch. Right. And that inch established as a habit is going to create a mile of separation between you and debt or you and financial freedom. Right. So I just like to take these last 2 minutes. I really want to share something tangible with everybody that's watching. I'm going to do my best to articulate for the people who are watching the rebroadcast or listening to the podcast. But there's a guy named Albert Einstein. Right. I know everybody's heard that name before. Everybody's heard of Albert Einstein. Monica already knows where I'm going with this, right? So Albert Einstein, right? So everybody knows who he is, but very few people have heard the rule of 72. Very few people. Albert Einstein had a quote, all right? He said, compound interest is the eighth wonder of the world. And earn it, those who don't pay it, okay? In school, as Ruby was saying, they don't teach us how to pay taxes. Right? They don't teach us how to build good credit. Even what Monica shared in the last 20 minutes, that was game. That's freaking game. And it's like, why do I have to come to a freaking podcast to learn how to build my credit or learn that I can put my child as an authorized user on my credit card to build their credit before they even own a credit card? That's freaking genius, right? But at the same time, it's up to us to educate each other. So here's what I'm going to share with y'all real quick. And this is, if y'all got your notebooks out, you're going to want to write this down. I promise. I promise. So, can everybody see my screen right here? Yes or yes?
Well,
yes. We live, Kat? We live?
Yep.
All right, check this out. This is important, right? I'm not going to go into as much detail as I do when I'm giving appointments and seminars and presentations, but I do want to highlight, right? There are 3 rules of money. Wealthy people know these rules, and that's why they're wealthy, right? I love what Ruby said about looking rich doesn't mean you are rich, right? Being wealthy doesn't mean you're going to keep that wealth, okay? That's also an important distinction. You don't have to be wealthy to build wealth, but you do need to be financially literate to build wealth and to keep that in your family for more generations than just your own, okay? So let's delve into this really quick. Albert Einstein said, compound interest is the eighth wonder of the world. Those who understand it earn it, those who don't pay it. So what we're looking at is just an example of different amounts of interest that you can earn on your money. That means your money is working for you, or you can pay on your money. That means that you're working harder for your money than your money is working for you. So as an example, Kat, let's say as an example, you put money in the bank, okay? The bank, as we know, is giving way less than 1%. Actually, most people don't know that, but the bank is giving way less than 1% interest. And this is an example of if you're earning 1%, Einstein showed that if you take 72 and you divide it by the interest you're earning, it tells you how long it takes your money to double. Simple math. So 72 divided by 1 is 2 years that it takes your money to double. This is important. Okay, stay with me. I want to break something down for y'all. So let's say you're 29 years young. You put $10,000 in the bank earning 1%. I talk to people who work at banks all the time who don't know this information. I talk to people who work at banks all the time who say they don't give out 1% of interest. This ain't the 70s. Right? But I want to ask you, Ruby, honest question. What are you going to do with $20,000 in 101?
What am I going to do with $20,000 at 101?
101.
Probably not much. I'm probably not going to be doing much. What I'd like to do is, go on a round the world cruise,
right?
Have some cocktails, but
right.
That is not very likely at 101.
Exactly. And we also have to consider that in 72 years, considering the natural increase in the cost of goods or inflation, 20,000 is going to be $10,000 in 72 years, right? That's also important to consider. Just keep in mind, 80% of Americans are saving their money in the bank. 80% earning next to nothing on their money. This is a problem that we aren't educated on. But we're not here to talk about problems. We're here to create solutions. Okay? So let's look at the other side. This is where most Americans are, this 1%. Let's look at where wealthy families are. And not because they're wealthy, because they're educated. Financial literacy is key. So the only thing that changed in these columns is the percentage, the amount of return on your money or the amount that you're paying. But let's look at the return on your money. Let's say you're earning 10%. So if you put $1 in the bank and you're earning 10% interest, that's 10 cents on every dollar. Okay? Stay with me. So 72 divided by 10 is 7.2 years. The only thing that changed is the interest that you're earning. So the question is, if you're 29 and put the same amount, Monica, what do most people want to do at 65?
Retire.
Okay. Would you rather retire at 20 and try just anything besides work? Anything besides work, right? Here's the thing. I had a conversation with a gentleman who's 57 years old, right? This was Friday of this past week. 57 years old, okay? Most people don't know that the average amount that a 60-year-old has saved for retirement in today's America is $172,000, okay? Let's rewind. The average amount the average 60-year-old has saved, that means they're 5 years from retirement, is $172,000. Do y'all got a calculator on you? Anybody got a calculator? Okay, Ruby, I'm gonna borrow you real quick. Okay.
Yeah.
So take out your calculator real quick.
It's right here. It's right here.
Okay.
Yes.
Check this out. So let's say you want to have a decent salary in retirement, because when you consider retirement, you don't have to wait till 65. You just need to have enough saved so you don't have to work anymore. That's simple.
Right. I retired at 50. So yes.
Boom. Yeah. There it is. You know the game.
I am retired.
There we go. Now we're talking. Okay. So let's say you want to have a decent retirement where you're pulling in, let's say $40,000 a year, right? Really simple. Okay. So put in 40,000 into your calculator really quick. And I want you to show it to the people. Show it to the people just so they can see it. $40,000. This ain't no magic trick. This is math. Okay. $40,000. And let's say, Ruby, you're 65 years old. About how many years do you plan to live on that money before you die? Just give me a number. How many years?
Hopefully at least 30.
At least 30. At least 30. Let's say, to be fair, 25 years. So
right.
90 years old. 65 to 90. That's 25 years on a 40,000, like meager but modest salary. So 40,000 times 25. I want you to show the people, what does that equal?
$1 million.
Okay. So let's take a step back. Because in today's America, the average 60-year-old has $172,000 saved for retirement. This is before taxes, by the way. That's another conversation. But when we consider where we're saving our money and the lack of financial education we receive, it's important to know there are other options on what we can do, not just when we get into debt, not just when we need to rebuild our credit, but actually building wealth, creating stability, creating an opportunity for the next generation. If we can't do it in this generation, which we can, but if we want to pass the buck to the next generation, let's at least give them some things that we didn't have, starting with financial education. So age 65, earning 10%, your money doubles every 7 years. Kat, would you rather retire with 20,000 or 320,000?
I think I take the 320.
It's a freaking no-brainer, but it starts with financial education. So that's all I wanted to share with the people, because most people know it in reverse, right? Paying 10% interest on credit cards, paying 10% interest on student loans, paying 10% interest on mortgages, and earning less than 1% on our money. This is why these conversations are so freaking important. So share this video with your friends. This matters.
Come on.
Certainly does.
So all money is not good money, my friend. All money is not good money, my friend.
The consensus. Well, are we done, y'all?
I think we have to wrap it up now. We gotta save something for episode 2.
We do. So, Monica, really quick, I'm gonna hit you up. I need that consultation, and I'm not ashamed about it. But Monica, let me ask you, where can the people find you?
So, I guess, should I just drop my number out there, my contact info?
Yeah. Hey, however you want them to get in contact.
However you want them to get in contact.
So first, you guys can actually find me on Instagram. I'm under Monica Lee Changing Lives. And then my direct contact is, I'm in the Bay Area, 510-375-8322. That's my business line. So you guys can definitely shoot me a text or a call, either or. And I do free consultations. But my goal is to help other people. So whatever I could do to add some value to whoever it is that needs my help, I'm here for you guys. And thank you guys for having me on. This was so much fun.
Oh yeah, we got about 30 people watching live, and I know we'll have hundreds watching in the rebroadcast, right? So I'm excited to start sending some people your way, including myself. But Ruby, I know you dropped some dimes as well. Where can the people find you?
Same. You can find me on Instagram under Ruby Envy, Facebook under Ruby Envy, Twitter under Ruby Envy. You can find me on all the things under Ruby Envy. Hit me up anytime.
Amen. Amen. She said you ain't getting a number.
Where can they find you, Brother Kwesi?
Oh man, so you can find me on IG as well, Kwesi.dreams. That's KWESI.dreams. You can find me at Alignment Agency on Instagram. You can find me at Alignment Agency on Facebook. And in all honesty, you can just close your eyes and say, Kwesi, I need your help, and I'll pop up right there. Right.
Just like a genie in a bottle.
I have arrived.
I got you. And Kat, what about you, brother? Where can they find you at?
Yeah, well, I want everybody to make sure they follow our Heal the Hood page on Facebook. It's Heal the Hood 2020 on Facebook. We do have our Heal the Hood event coming up in the next couple months. We have 2 events coming up. One in Excelsior, where we're going to be feeding a couple hundred people in the Excelsior community in San Francisco, and also passing out free produce to the community, giving out free yoga classes, Zumba classes, body strength training classes, all free for the community. And we're going to also be in the Lakeview district doing the exact same thing, y'all. So make sure you follow our page on Facebook, follow our page on Instagram, which is Heal the Hood Events, and also follow our podcast on Spotify, which is Heal the Hood. Okay, if you want to follow me directly, man, you can find me on IG at Cat Fitness 3, Cat Fitness, and then YouTube, Cat Fitness. Our website is www.catfitnesswellnesscenter.com, y'all. Like I said at the beginning of the show, it's all about education, motivation, and inspiration in the community. We want to better our community, uplift our community, and this is the material and content that we bring to you each and every week, Tuesdays at 5 p.m. So if you enjoyed this video, if you got some value out of this video, please hit that like, share, and comment. so we can continue to spread this message. Our goal is to spread this message across the country, potentially through social media, to impact millions of families across the country. So help us achieve that by just hitting that share button, y'all.
Wow, this was a classic. I love it. But we got to leave the people wanting more. So we'll be back here next Tuesday at 5 o'clock. Monica, thank you so much. Ruby,
Thank you, guys.
double thank you. Kat, you know we got to bring it to them live next week. And you know we'll be back. But in the meantime, like, comment, share, and stay tapped in. We'll talk to y'all soon.
Peace out, y'all.